Thank you all. Welcome to the Finance Auditing Committee of December 19th, 2024. I'd like to call the meeting to order. If you have a roll call, please.
Thank you. Good morning, everybody, again. Starting with Director Dorsey.
Present.
Judy King.
Here.
Charles Bull.
Present.
Hernandez. Here. Aston.
Here.
Verdoni.
Here.
Vice Chair Parr.
Here.
Chair Rabbit.
Here.
And President Cochran.
Here.
You're 100% for your Finance Committee. Also in the room, we have Directors Garbarino, Hill, Terrio, and Deere. So you are committee of the whole and committee of the book. Huge work.
Good day.
Great. That's perfect. Thank you all very much. We'll move on into item 3, which is the ratification of previous actions by the Auditor Controller. First off, we have Monique Spike from PFM here. Those items that we're about to discuss start on page 3 through 24 in your packet. Monique, it's good to see you. Thank you for being here. Take it away.
Good morning, and my pleasure. So I always have the great distinction of coming to this body when things have shifted drastically overnight. And so I'm going to take some time just talking about what we're reporting here in terms of the market, and then also why the big shifts, and I'll explain some of that. And so I'm going to have everybody jump to page 8 of your packet. So we've been, in terms of interest rates, we've been in an environment where the outlook for interest rates has been declining because the market has essentially expected the Fed to continue cutting interest rates at not necessarily an aggressive clip, but just on an ongoing cadence. And so at the beginning of the month, I think there was an expectation that we would see a 25 basis point cut in December, which did come to pass just yesterday. But more importantly, that the Fed would continue that rate cutting cycle through 2025 with at least 4 more rate cuts. And so there was that expectation that the rates would decline by 75 to 100 basis points, or by 1%. What happened yesterday was the Fed essentially splashed water on that notion. They revised their rate projections to show only 2 rate cuts in 2025 rather than the 4. Now, what are the implications for that, and how does it impact what we're doing for the district? Well, the implications for that is that is a signal that the Fed may not be as confident about inflation coming into control. We are expecting a new presidential administration in January. There's a lot of uncertainty around what those policies will actually be. Some of the policies on the table include placing tariffs, which would increase prices, which could drive up inflation. But on the other side of that, too, there's the expectation of perhaps even retaliatory tariffs, which could further drive up prices. And so the Fed revising their interest rate projections seems to suggest they're creating room to manage for that potential inflation. Another thing, too, if you sort of look at the underlying data of that, is that the Fed may still have concerns about the economy. And so right now, I think there's a bit of a holding pattern for the market. Economists are very careful not to, talk too loudly about the inflationary impact of tariffs. Other things, too, about the administration is there's this hopeful tone, perhaps, that we may get into a bit of a deregulatory environment and tax cuts, which could cause corporations to be a little bit more nimble, and perhaps that could have a more productive effect on the economy. So all of that combined, what happened? 1, the stock market lost a lot of return, which has less bearing on this portfolio that we manage for the district, but it is an example of investor sentiment. And 2, interest rates bounced up significantly. So if you take a look at this page 8, which I directed you to, I'll show you the 2-year Treasury. At the end of November, it was 4.05%, and that was already slightly down from October. Today, the 2-year Treasury floats around 4.3%. So interest rates have jumped back up. So for our strategy for the district's portfolio, what that essentially means is buying opportunities are going to continue to be attractive. We'll still be able to lock in higher yielding investments and they are still near their historical highs. That's a good thing for income. We have been making a lot of liquidity available in the district's portfolio over the past few months. Your short-term investments in CAMP and other cash assets are also going to benefit from rates being a little bit higher than longer. So on the whole, the interest rate or earnings outlook is better for the district. Of course, on the downside, there still is a lot of uncertainty in the markets. What we are doing to mitigate some of that uncertainty risk is we're going to continue to be very thoughtful to the district's portfolio cash flow needs. We work with your staff fairly closely on understanding when and how you'll need money in the portfolio. And our portfolio management team takes a look at those cash flow needs and makes sure that the portfolio is appropriately stacked. This means that even if rates do go up and the market value of your investments decline, you still have cash available to pay your operating expenses and anything that may be needed for the portfolio. Other things that we're doing, we're continuing to be careful about corporate exposure. If you go a bit further in the packet, in page 16, you'll see the sector diversification of your portfolio. And I always like to highlight, you'll look at corporate notes, asset-backed securities, certificate of deposit, and commercial paper. We see a lot of 1% on this list and less than 1%. This really highlights that, our strategy is to be diversified, so we're not taking a lot of risk on any one issuer. That becomes important when the markets, get a little bit uncertain and there's a sense of what are tariffs going to do, who's going to be impacted, are we going to have retaliatory tariffs? You're well spread out across a number of different issuers and industries. And so your exposure to that risk is not going to be very high, and we're going to be managing and watching that very carefully. Other than that, the economy is still holding on strong. The unemployment report was as expected. It ticked up slightly from 4.1 to 4.2%. The jobs added to the economy were in line with expectations. The Fed even reiterated yesterday that they're not concerned about the employment picture. It really is just a sense of waiting and seeing what the new administration does and how that impacts the market. As far as the district's portfolio, we believe that we're very well prepared and structured to manage any risks that come from the interest rate environment and or from corporate exposure. Are there any questions on that summary? Yes.
I know you may not be able to answer this, but if the tariffs come in place, let's just say, all the tariffs come in place and the market goes down. Well, first, do you think the market would go down? Second, how would that affect our portfolio, the district's portfolio?
That's a good question. I think if we have tariffs in place as advertised, then you're looking at a hyperinflationary environment. And I would anticipate that the Fed would be looking to raise rates substantially to mitigate some of that risk in the market, to slow down behavior so that we don't have, further price hikes in addition to the hikes that would be passed on through the tariff activity. How the stock market views the tariffs is, at this point, is anyone's guess. Because again, I think there's this sense that the incoming administration will also be looking to, cut a lot of regulatory requirements from businesses, which may be, a net positive for the stock market.
Great. Anyone else have any questions for Wendy?
Okay. I'd like to then reserve some of my time to make a presentation on behalf of PFM Asset Management in honor of our colleague and friend, Joseph Wire. So we bought something for Joe. PFM Asset Management has had the great pleasure of working on behalf of the district. I'll stand up for a very long time, and we hope we've kept your portfolio and your assets safe during that time. But throughout it all, Joe Wire has been the constant, working with me, working with Leslie Murphy and Nancy Jones before him. So we present this plaque to Joe, and I'll read it for the board. And it says, Award of Excellence on behalf of PFM Asset Management, and with sincere appreciation, this plaque is presented to Joseph Wire in recognition of your leadership and commitment to the public sector. It gives us tremendous pleasure to acknowledge you at this time and to express a sincere thank you for your dedication. And since Joe is retiring, we got him a succulent so that he can enjoy his days in the sun. This is for you as well.
Very nice.
Very good.
Okay. Oh, yeah, that's probably.
Monique, thank you very much.
Thank you.
Well deserved, Mr. Wire. I think we'll have a few more comments at the close of the meeting as well. This is an action item, so I'll look to my colleagues if there's no further questions of Monique. Can I get a motion to approve the ratification of the previous actions of the auditor and controller?
So moved.
Second.
Motion and a second. Is there any public comment?
We have no public comment.
We have no public comment. With that, we'll have a voice vote today.
Voice vote this time?
We'll do a voice vote. All those in favor, please say aye.
Aye.
Is there anyone opposed? Please say no. Hearing no opposition, that does pass unanimously. Thank you very much. Moving on to item 4, which is the budget increase. The item we just heard at building and operations. So this is the budget increase on the Golden Gate Bridge Physical Suicide Deterrent System project. Are there any questions? Is there any public comment?
We have no public comment on this item.
If there's no further questions, comments, or concerns, can I get a motion to approve?
Second.
We have a motion and a second. Again, we'll do a voice vote on this one. All those in favor, please say aye.
Aye.
Is there anyone opposed? Please say no. Hearing no opposition, that does pass unanimously as well. Thank you. Moving on, Mr. Wire, the status report on the fiscal year 24-25 budget.
You. Chair's low to the ground. Got anything here? I don't know. I'll let it go. Just quickly, because the finance committee, I would, 25 years ago, I never would have expected that we would have had a partner that's worked as well for us as PFM has worked for us. So it's a credit to all of you also and your predecessors that you stuck with them, all these years and that worked with them. It's always surprising. I wouldn't have expected that. And we can't really think of another partner. We've moved different private sector partners at different times for different, for reasons, either staffing or changes in their policy as well. So it's been excellent to keep them. And of course, they worked with us here and with your OPEB trust board and done an excellent job. And the people have changed, but the policy keep going. And now they were sold a couple of years ago to U.S. Bank. Hopefully that will not change. So far, so good on that front. All right, going to the status report really quickly, page 35 of your board report. We're looking at this year, the current year that's showing right now, and then to turn to what we usually look at that chart on page 37. As you know, if you look at the top right-hand corner, we passed a budget that was $36 million in deficit so far this year. Lines 1, 2, and 3, the bold numbers show in that second column from the right that those are all positive. We've had positive gains in our above budget and our toll and our tolls that's offset a little bit lower in fares. Positive gains in other revenues, which is primarily market valuation, which actually we're not exactly sure how it's going to look after what happened today, depending on yesterday. But if you notice, the market today is pretty level. Maybe it goes back. Who knows? Maybe it goes back up. We'll see. But the market valuation of our bonds have just changed, and that's primarily why we're seeing other revenues up. And then our expenses are down, and that's the work that your management teams have done to keep their expenses down, and we expect to keep that. So the $36 million estimated deficit is now down to what we think is 22, and you've got to keep working on that as we go, and that'll be paid out of reserves. Any questions on this particular report? Otherwise, I can go to the next one. Yes,
Please do.
looking at page 45 would be the traffic controllers. And we'll skip past 45 and go to the table on this report, which is on page 47. And I think the one thing I would point out there is there's 6 boxes. You say the ones on the left are the patronage or traffic for the bridge, bus, and ferry. If you look into the fifth column over from the far left, that's the actuals where we compare the actuals of last year to the actuals of this year. And as you remember, we were telling you in the very summer that, the bridge traffic was down a little bit compared to the previous summer. It's picked back up. So right now it's about a half overall, which is the bold number at the bottom of the box in that same column. It's up about 0.5% from last year. That's excellent. If we can keep a little bit of growth from the previous years, that's great on the bridge. It'd be, be great if it was 1%. But anyway, then the same thing, if you go down that one column and you look at the bus box and then the ferry box, those numbers are still positive too. What I would point out is they're about half or a little bit less than half of the rate of increase. So the rate of increase last year was, say, 10% in bus and 20% in ferry. Well, now it's 5% or 4% in bus and 10% or 11% in ferry. So the rate of growth, our rate is sort of is sort of leveling off. To be expected. You cannot have, like I say in the market, you can have double-digit growth forever because that is unrealistic. We can't have the big growth we were having forever also. But again, to have growth, that's a good thing. Through the first 4 months, these are our better months, warmer weather, everything like that. So we'll see how the winter plays out. But at least it's positive. And then the rest of this report is just the comparison tape graphs. If there's any questions on this one, I'll move on to the next one.
Would you ask?
Yes.
Joe, this will probably be the last silly question you'll have to endure for me. So, we do counts for southbound traffic. Have we ever done a northbound count just for that? Hold on.
We do count northbound traffic. We have, we don't have the same, we count our southbound traffic often in our toll system itself. We don't have a toll system on the north side. So we have what's affectionately called the hockey pucks. They're in the roadway and they count the vehicles going over them. So we keep those, we send them around at least internally, every day, basically.
Are they significantly different?
Northbound counts are slightly higher. You have slightly more traffic going northbound than southbound. And it's pretty much that way every day.
One of the initiatives in your strategic plan was associated with that question you just asked. And so one of the things that we'll be looking at in the coming years is studying, is there enough of a difference to warrant considering collecting tolls in both directions? Splitting the toll amount in half, so it's revenue neutral. But then if we have more northbound, we can pick up money. How that additional revenue compared to the expense associated with that. And so it is one of the items in our strategic plan because you and others have noticed that there's a little bit more northbound traffic than there is southbound.
Okay, thank you.
Any other questions for Jeff?
Okay, page 53 is our financials for the month. We are looking at October as we were for the other reports. November's will come to you with December's in January because this meeting is a little early in the schedule and therefore we don't have the November data for you yet. So through 4 months, third of the year, so get a good measure of that. If you look at the table in the middle of and then look at the far right of that table, that's the current year's numbers. So revenue's about 89 million and then expenses at 81. So we're 7.6 million over. That's excellent. About 5.1 of that is this market valuation thing I point out. So even if you take that out, you're still up a couple million. As I mentioned, those are good months and hopefully January, February, March won't be too bad. Then we'll pick back up again in the summer. So this is a similar pattern to what we saw last year. And last year ended up being roughly revenue neutral. And we were a little bit positive, but as I said, most of that was market valuation to put us positive. But at least we were very close. And that's excellent to do because that'll make the future easier for you to manage. And easier for Jennifer to manage with you. The rest of after that report are the front page are the line item budget. So numbers. So if there's any questions, I'm happy to do that. Otherwise, I'll just move on to 63, which is the capital. So through 4 months of the capital spending is above what we expected. It's not surprisingly above. It's 38%. You would say 33% if you were right on target. As I mentioned previous to you, it's the projects in all three of the operating divisions are above budget, and that's a good sign. It means we're putting out projects, and it's excellent to see. So, and that's it. If there are any questions with any of those, I'm happy to take them.
Any questions, Joe, on any of the reports that he has given? I was a little, the red ink on this page really kind of made me look twice. Make sure that we were still on track.
I'm sure it was supposed to be international orange and
yes.
not red. So we need to ask. Yes.
Shay.
We don't like red ink on our financial reports. You're absolutely right.
Yeah. Again, no other questions, comments, concerns for Joe? Is there any public comment in the last, really items 6, 7, or 8?
We have no public comment for item 6, 7, 8A, 8B, or 9.
Okay. Joe, before you go, just want to say this is our last Finance and Auditing Committee. There's a lot of laughs, I'm sure, as you hit retirement. It's always bittersweet, I think, for those members of the board to see someone of your caliber retiring, and just want to wish you all the best. Thank you for your service. I do think that even though this last since 2020 has been kind of a screwy and upside down, and lots of I've always felt confident in your abilities to lead us through that, and really thankful for your communication skills and your professional acumen and everything that goes along with that. So just from myself, thank you, and I'm sure that's true of all my colleagues. And I know a lot of other Director Hernandez, do you want?
No.
You're good. Okay.
I really appreciate it, and I've enjoyed working with the Finance Committee and those of you who come to the finance meetings. And I appreciate when we get more than just the Finance Committee, make it a committee as a whole, because the more people that hear the story, the better off it is for all of us across to manage the organization. So it's been a joy to do that, and I just coincidentally we had the bankers in the other day for the rating agency, to keep our rating high. We don't want that changed. It helps us if we do have to go out into the market and with our current commercial paper. They're different people than the rest of us, because they're just worried about our ability to pay, right? Just our ability to pay. They don't really, they're not looking at what, how great your bus service is or whatever.
Yeah.
They just want, can you pay the bonds holders? Because that's their job. They're rating that ability. So I always remind them, and I think I said this like the second or third year I was here at a meeting, and I think it made this papers. And I'll say it again. You do run a monopoly. Never forget that. You are a regulated monopoly, and that is why you're not there to pull out, monopoly rents from your patrons. You're regulated to provide a service, and that's really important for any monopoly in our society. That's how we manage it. But you do run a monopoly. So we should be able to balance our books with that. In other words, we do have the ability to raise prices when we need to, if the service is warranted, and that's the most important thing you can do. So we've been doing that absolutely fantastic in the last 15 years. These little incremental increases, working to keep the service quality with the price that they have to pay, so we can keep the service out there, and that's worked. So I don't see why that can't keep working, even in this very difficult time that we've had with COVID.
Well said. One last thing I just want to make mention. I'm fortunate enough to serve on a couple different capacities. I'm finance chair on a couple of other agencies. And I got to say that week in and week out, and every committee meeting, the way that you and your staff, and I know there's a team behind it, put together the picture that we look at and make sure that we're on track. I'm just very grateful for that, because it's clear as can be, and it really puts a lot of that, gives you a lot of ease, not having to search for different numbers and whatnot. So thank you for that.
I'm sorry, I'm not even on this committee, but I just, my only regret, other than not seeing you monthly and we talk downstairs, you're just such a gift. And I know all of our paths will continue to cross. But as someone who also operates a regulated monopoly, my other regret is in all of these years, I have not taped your pearls of wisdom. They're just shining. I even asked Barb to give me her notes from one of the last times we were on the phone. So
Thank you for your leadership and your stellar performance in that job.
Here.
Joe, thank you very much. With that, we are at the end of our meeting. I'll look for a motion to adjourn. A motion and a second. In hearing no opposition, we are adjourned.